Hello, everybody. Dan Lucas from Credo here, and we are on day 16 of 50 states in 50 days. And last video we did Kentucky. Today we are going just due south to Tennessee. And as you may or may not know, Tennessee is a state that does not impose a state income tax. So this video is not going to be really long, but there are some things that I do want to talk about that might be helpful to a resident in the state of Tennessee or somebody that's doing business in Tennessee that has a nexus in Tennessee and might be exposed to some tax. Again, just so we can get the history part of this, is that Tennessee was again the 16th state admitted to the Union, and it was admitted on June 1st, 1796. That is exactly 4 years after Kentucky. So Kentucky was really fast, right after Vermont. Well, it was within a year. And then Tennessee took 4 years. And then after that, the states, the admission of the new states starts to spread out a little bit, though I still think from historical perspective, incredibly fast that we were admitting new states to the Union. But anyway, 4 year lag, and then we admitted Tennessee to the Union, but we're still in the 18th century here, okay? So back to Tennessee as far as taxes. Like I had said, there's no state income tax imposed in Tennessee, but there are various other taxes. So I wanted to first just give you a list of all the taxes that are imposed in Tennessee, and also to bring a little bit of awareness maybe to individuals that think that, you know, if you go to a state that does not impose a state income tax, that's great, don't get me wrong, and there's a lot of people that benefit a lot from that, but that doesn't mean it's a tax-free state. They still have to drive revenue in other ways, okay? It's just the way that they govern. So I'm going to read a list really quick of all the taxes that they impose in Tennessee to give you an idea of where you are paying taxes and where you might be able to use tax credits against, okay? So first is there's an alcoholic beverage tax. There's an automobile rental surcharge tax. There's a bail bonds tax. There's a beer tax. There's a business tax. There's a coin-operated amusement tax. There's a consumer use tax. There's a fantasy sports tax. There's a franchise and excise tax. There's a gift tax. There is a gross receipts tax. Businesses, I'm assuming, self-employed. There is a hall income tax. There's an inheritance tax. There's a liquor by the drink tax. There is a local occupancy tax. There's a local tax. There's a motor fuels tax. There's an oil and tire fee tax. There is a professional privilege tax. There is a sales and use tax. There is a severance tax. There's a tobacco tax, and there's an unauthorized substances tax. What in the world is that? Let me look at that real quick. So that is a tax that applies to controlled substances and certain illicit alcoholic beverages. So it doesn't necessarily mean it's illegal. It just means it is uncontrolled substances. So anyway, you know, you can see from this list of tax, this is interesting. It gives you a little bit of insight into, you know, how they put policy forward. A lot of syntaxes here, right? So, you know, I would assume that there's a lot of, you know, that you could just assume from this or infer that, hey, there's a lot of religion that garners, you know, the culture here, you know, and this is a lot of stuff that probably is legacy stuff. They're taxing a lot of stuff that normally people would consider sin tax. It also looks like they are taxing, there's a lot of stuff on, you know, cars, vehicles. There's a lot of stuff on people traveling into the state, right? So they're getting their tax from your liquor, your gambling, like the fantasy sports stuff, you know, controlled substances, whatnot, so sin taxes, and then also people coming through the state, right? People that are staying there in hotels, renting vehicles, things like that. So they're getting a lot of tax revenue from out of state for people that maybe don't live in the state, which, you know, for the residents of Tennessee, you know, they're probably doing that for the best interest of the people in Tennessee, and they're charging taxes and all this in lieu of a state income tax. So, you know, is that good or bad? I don't know. It's not I don't really have an opinion on that. It's just gives you some insight in the governance of the state, and maybe where some of the roots are coming from, right? So a lot of times taxes are a reflection of the culture of a state and the way that it's being governed. Okay. Um, so anyway, these are different areas where you're paying taxes if you're in Tennessee. So if you have a tax credit or a tax incentive, obviously you can't use it against state income tax because there isn't one, but you can use them against some of these other types of taxes. Okay, so just know where you are paying tax and be aware of it. All right, so now I'm going to go over to, there's a section in the Department of Revenue in Tennessee that talks about deductions, exemptions, and credits. Again, not a whole lot here. They do have a nice list of deductions you can take, but it's nothing that is unusual or necessarily something very specific to Tennessee. Okay, it's just kind of it's a good educational thing about what kind of deductions you can take if you're a business, a small business, small closely held business, self-employed, contractor, things like that. There are certain entities under specific circumstances in Tennessee that are exempt from paying the business tax. Remember, business tax is one of those things that I had listed in that long list of taxes I gave you. These types of entities include, but are not limited to, people acting as employees, manufacturers, religious and charitable entities selling donated items, direct-to-home satellite providers, and movie theaters. So they favor entertainment. Okay, cool. So in other words, don't come out and commit these sins with your drinking and your controlled substances, whatever. Go to the movie theaters, watch TV, that kind of stuff. Probably just family-oriented type stuff. At least it seems like that's what they're trying to encourage. It also says, under very limited circumstances, certain people unable to see due to blindness and certain disabled former members of the armed forces are exempt from the business tax. Those qualifying for this particular exemption must also submit this affidavit. So you have to submit some paperwork on that. Then it goes on to say, businesses with less than $10,000 in taxable sales sourced to a county are exempt from the state business tax in that county. And businesses with less than $10,000 in taxable sales sourced to a municipality are exempt from the municipality business tax in that municipality. So, if you have less than $10,000 in gross sales or gross receipts, you're going to want to make sure you're aware of this. That's a pretty small business, but if you're a contractor, maybe filing a Schedule C on your personal return, your 1040, just be aware of this. If it's less than $10,000, then you don't have to pay this tax. Let's see, if it says that and then it goes on to say, there's one little note here, a footnote. It says, if your taxable sales are less than $10,000, but more than $3,000, you will have a licensing obligation. So I'm sure there's a lot of people that are in that $3,000 to $10,000 range. You're going to want to check on that. It's not necessarily a tax credit item, but making sure that you're compliant. And if you are, make sure you're getting that license, or you're fulfilling that licensing requirement. Let's see. That's about it on that. And then the final thing it says on it is, now, backing up 1 second, just because there are not a long list of credits now, in fact, there's really no credits listed. There's exemptions listed, right, which means you're not subject to tax, which I think is actually kind of a better way to do it, because just if you exempt people from a certain tax rather than giving them credits, it's a lot less administrative paperwork and headache. Okay, and then you're actually not having that problem of people missing the tax, which is, why would you make a tax incentive where most people would miss it and not get it? What's the purpose of that, right? And so I just think this makes it a lot easier. Just do exemptions, do incentives to not be subject to any of these other types of taxes that are outside of state income tax, rather than giving credits. It's just more paperwork, more hassle, more confusion. So I don't think there's anything wrong with this. Anyway, let me just read one last statement about credits. It says here on the website is, taxpayers located in the state may take a credit for personal property tax paid, right? Personal property tax, home, right? You pay home. You might pay ad valorem taxes on different types of property. I mean, a lot of times people might have inventory or luxury goods, items, things like that. Take a credit on that if there are credits you are qualify for. It also says the amount of the credit can be up to 50% of the taxpayer's business tax obligation. The property subject to the property tax must be located in the same place of business that is covered by the business tax return. So, in that case, again, keep in mind, legislation can always happen to offer tax credits. Okay, so they may offer you personal property tax credits on homes for solar or some sort of energy saving item. Okay, so that kind of legislation can change and come into effect anytime. So all you'd really need to know is that um, obviously you have to be in the state, and you can get the credit up to 50% of your tax obligation, and that's really it. So yeah, it's kind of a light video today because Tennessee doesn't have a lot of credits going on, but that's really because number one, they don't have a state income tax, and number two, they use exemptions from the tax as part of fulfilling their policy using the tax code. So kind of, it's fairly efficient, so no knock on Tennessee for that. So that's going to be it for Tennessee. And any questions, comments, please put it below in the video. If I'm missing something and you want to have questions about it, or if you're fact checking me and there's something I said that maybe wasn't correct, I'm not trying to necessarily be right here. I'm just trying to get information out there and try to help people take advantage of the tax code that maybe aren't already, or maybe they missed something or didn't know about something. So this is definitely community spirit here. If you got any questions, concerns, anything, just put it in the comments. Or if you are a tax professional in Tennessee and you know something you think should go on here, by all means, please put it in the comments. Tomorrow we're going to go to Ohio, and Ohio, there's another 7-year period of time, so another long period of time before Tennessee and Ohio. But then Ohio was the 17th state admitted to the union, and so tomorrow, and Ohio does have a state income tax, so I'm expecting to have a long list there to talk about. So tomorrow we'll do Ohio, but until then, thank you so much, and I will talk to you soon.